Be very, very careful today, folks. Yesterday, the all clear really wasn't sounded. Let's talk about, let's start right off the bat with why the market reacted the way it did yesterday. It was an absolute historic short squeeze, the biggest in 3 years, okay? The most shorted stock index rose almost 3%. Okay, folks, that's the biggest short squeeze since December of 2011, and that really smashed the Russell 2000 higher. Okay, so I wouldn't, for everybody who's like, wow, that everybody pull out the rally flags and put your rally caps on. That's not the case, folks. Yesterday was a short squeeze. 2 weeks, was it 2 weeks to the day almost that the market imploded. Here we are with this rip your face off rally. I really wouldn't be too bullish at this point, especially because this afternoon we have the end of the Fed meeting, and we're going to get that written statement. It's no press conference today, okay? No press conference today, so we're really not going to get to parse the spoken word. We're going to be taking a look at the written word today. But have no fear. What happens after they send out a written word? Well, tomorrow Ms. Yellen is going to be speaking at a conference in D.C. Here we go. So at 9 a.m. tomorrow. So if the market goes full freak mode based on what the Fed says in their written words this afternoon, have no fear that Ms. Yellen will clear it up tomorrow. Okay, but with the Fed and potentially, not potentially, but definitely exiting their POMO, permanent open market operations, and looking to potentially start raising interest rates, I wouldn't foresee anytime soon. I'd say 2015 at the earliest. One can be forgiven for being schizophrenic. Look at Reuters. Shares rise as investors put faith in Fed's message. So that's what they said about yesterday. So there's Reuters. Then here's the CNBC cheerleaders. Why the market is losing its faith in the Fed. Okay, well, great. Now I'm really confused. Well, run over to Market Watch. Fed will hold market's hand as it ends QE stimulus. And then down here, 3 reasons to expect a 30% market meltdown. So the Fed's going to hold the market's hand, and here's 3 reasons why we're going to see a 30% market meltdown. So you can be forgiven for being absolutely schizophrenic and tripolar in this environment right now. So that tells you to be careful, okay? And, from the Journal this morning, U.S. earnings reassure investors, but growth lags. Sold. Don't believe it. 70% of Wall Street companies beat, but take a look at the beats. Perfect examples. Take a look at Twitter and Facebook. Twitter beat by a penny, I think it was, which I can find in my couch. Facebook as well, but look at their guidance and look at their growth. So, U.S. earnings reassuring investors. Now, I completely disagree. If anything, it should frighten investors, okay? We know that the number one buyer of the S&P 500 for the past year has been the S&P 500, which is artificially going to inflate that bottom line and artificially inflate stock prices. I agree with the Journal when they say growth lags. I couldn't agree more. So don't. 70% of companies might have beat, but the old Wall Street-ism, if you can't hit the ball over the net, lower the net, is absolutely true. So be careful in today's environment, folks. Make sure you're hedged. Make sure you have some protection on in this environment. Let's take a look at the VIX. We covered yesterday, Thursday, we're going to see advanced GDP, which is a huge market moving number here, okay? GDP comes out in 3 types: advanced, preliminary, and final. Advanced is the earliest, obviously, so it's got the most impact. Bank of Japan press conference Friday, early morning our time, could potentially rip across the Pacific and impact us. Some Eurozone inflation data. And then over here in the United States, we're going to get a slew of economic reports, inflation, personal spending, personal income, Chicago PMI, revised University of Michigan consumer sentiment. Remember the other day we got rip your face off, great consumer sentiment, and I'm not a believer of that. And then Friday night, we're going to get China's manufacturing PMI. But I'd be very careful here, folks. The market's flat today going into the Fed meeting, and I'd be very careful in this environment right here. Our buddy the VIX has been all over the place. I told my TGO traders that 14.15 is the new 12.13. Okay. The resting heart rate on the VIX for the longest time had been kind of this 12 and 13, and when vol's cheap, you buy it. When it's expensive, you sell it. Well, guess what? I think in this kind of new normal, this as we exit Bizarro market and the Fed leaves, I think when vol gets around this 14, 15 level, it's time to get long vol. So we're going to be talking about that during our accelerated retirement session on Friday in our live training session. Okay. I got to run. I'm actually up here in Hartford, Connecticut, speaking to Aetna, some executives at Aetna. So it'll be interesting to and having lunch with these guys, and also giving a keynote. So it'll be interesting to see their take on the economy, what's going on in the healthcare sector. So if there's any good gouge, I'll be sure to relay it to you guys later. Okay. Happy hunting. Make sure you hedge, and I'll talk to you guys later.